Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
John, authors from Bloomberg, did a very interesting Hindsight Capital, where he looked back at some of the trends and some of the positive and negative trends in markets. And when he would position the S&P Clean Energy relative to WTI crude, you can see that it outperformed by close to 80% over the course of the year. So very strong return in terms of a short crude and a long clean energy side. So this is a welcome respite for many of these stocks that did face, in many cases, direct headwinds from the Trump administration. I'd say that this underscores that the companies that were sustainable had strong business models that made sense from a fundamental standpoint, that they were likely to survive in the current wave of energy transitions. We've spoken last week about how 2025 was a defining year for metals. And our conversation in that case related to the rise of silver, the rise of gold, both touching record highs, and essentially the relentless rise of these metals, which really was unabated for the course of the year. If we look at the trend over the course of the top left chart, you can see that gold did not suffer the dip, although silver did at the time of the Liberation Day tariffs. It was a very steady rise and has been up essentially close to 60% year to date. And silver has had an even stronger performance of over 100% year to date, although it has had a very stark volatile development in the last few days. So this we've spoken about from really a sense of mixed drivers. We've spoken about how this could indicate a concern around currency debasement. It could also indicate a concern around the rising current fiscal situation, budget deficits, and how that would be unsustainable. There were also technical factors at work. Central banks, through either stocking up in gold at the expense of the dollar, or simply stocking up in gold as a way to fortify their reserves and not necessarily at the actual expense of the dollar. Although we have seen the dollar seen less demand and have had a weak year, its weakest year in about 7 years. But when we look at this, at the rise of gold, I think this is probably the one alarm bell that has been ringing for even the strategists that are relentlessly positive year to date.